Hi, good morning, Avan. When I'm looking at the merger commentary, largely they've always said that the cross-sell opportunities are large between HDFC Limited and HDFC Bank, and of course there is going to be a bigger and a stronger balance sheet. But other than that, to give you more perspective, 14 lakh customers of the 7 crore customers of HDFC Bank currently have home loans, roughly, and 35 lakh have taken home loans from external home loan lenders. So largely that opportunity is what HDFC Bank is looking to tap. With regard to assets, as very correctly mentioned by you, they are planning to double their book in the next 5 years post merger. 20 lakh crore book largely going to become a 40 lakh crore book, and largely driven by the mortgage business, which will enable that growth to come through. With regard to deposits, they are saying or suggesting that deposit mobilization is going to be the key. In fact, they are expecting CASA to normalize above that 40% mark. Definitely some amount of comfort there, and they believe that they are able to mobilize 7 times more funds from home loan customers than their non-home loan customers on average. They are also expecting retail deposits to double in the next 3.5 years. That should definitely put some amount of lever with regard to their NIMs. When we're talking about their asset growth, they are expecting 20% growth. Liability, they said, needs to keep pace with that growth, and what they are saying is margins may be under pressure in the near term. With regard to costs, well, they are expecting to add 1500 to 2000 branches every single year for the next 3 years. Now, technically, the combined entity will have roughly 7,000 branches. So when you are adding 1500 to 2000 branches, that's a 20 to 30% implied growth in terms of number of branches. So OPEX is going to continue to remain high, and cost to income ratio is going to remain around 38 to 39% in the near term is what they're expecting. Currently, cost to income is around 37%. So not too much in terms of that impact. When we're looking at ROAs, they are expecting ROAs to be around 5 bips lower. Currently, the ROAs are at around 2.03%. Roughly over the longer period, average of ROA is roughly 1.8 to 2%. So that should not have a material impact either. When we're looking at approvals, they're expecting the first set of approvals to start coming in from September. And they've said that both the RBI as well as the Ministry of Finance have blessed the merger, and they are not expecting an NOHFC structure with regard to the combined entity. So largely positive commentary, expecting hopefully a good day for HDFC Bank in terms of the market.